Social media interactions become interesting only when it is two-way. You must get a fair chance to interact with the person you follow or the person whose videos you watch. I have started this new initiative, Ask Milestones to Wealth Anything, AMA in short, through which all of you can stay in touch, ask me questions you like to ask, clear your doubts on personal finance, learn more about Milestones to Wealth and about our PMS products, and stay connected. So this brings us closer. I am able to be closer to you, to help you in whatever way I can. You feel closer by asking whatever you wish to, and we grow together, helping each other along the way. So fill in this form and stay connected through Ask Milestones to Wealth Anything. When a market is around the peak, when valuations are stretched almost across the board, whether it is in the large cap space amongst the blue chips, whether it's in the mid caps or whether in the small cap space, wherever you see, you will see valuations not quite attractive to what you like to actively seek or purchase. So when the valuations are higher, you don't like the valuations, you like the businesses. What is your immediate natural tendency? You are in a mode of searching. You want to identify something where the valuation is agreeable to you. That is your requirement. When that is your ask, your natural tendency is to slowly go down the quality curve. So you start thinking that maybe this stock will start being seen by the market later as a quality stock. So you start believing that you can find today what the market will see as quality tomorrow. When you start doing this, you start moving down the quality ladder. Sometimes your descent down the quality ladder can get accelerated. When is this? This happens when the market valuations keep going up, further frustrating you while you are lying in wait for the markets to correct. So you think the markets will correct, the market instead of correcting goes up another 5%. When that happens, what you want to buy goes up 10% or even more. When that happens, you start becoming more desperate, more anxious, and that fear of missing out starts growing on you. It's very natural. I have seen this side conversation amongst investors. What would they be telling each other? Pure, unadulterated crib. Everybody will be cribbing to the other. That nothing looks interesting, everything is expensive. It's ironic, right? All your investments are being valued higher by the market, and the investor cribs and cries, saying that he can't find anything to buy. We are obsessed about finding something to buy. We think that in any market we can find something interesting to buy. Good, no problem. But some markets are beyond us. Some markets can frustrate us completely, totally, and leave us without ideas. That time, if we are going to push it, in fact push it too hard, push ourselves too hard to find new ideas, then our descent down the quality ladder is going to accelerate. We are going to do it faster. Because we start thinking that more companies will be seen as quality by the market. First, we look at a few companies and think they will be seen as quality. Those companies appreciate in price. Then we move down the quality ladder and see more companies. As you move down the quality ladder, you will see more and more companies. And when you see more and more companies, you start getting the comfort. Wow, mujhe idea milta hai. I'm getting more ideas. If you soak in that stage, in that state of mind, chances are you will fall for some of these ideas. Now, this is something I would personally avoid as an investor, because in cycle after cycle, this has not worked. And what did we do when we realized it has not worked? we moved back to quality. And what did we do with these stocks? Either sold them at cost or at a small loss. So effectively, when you can't find ideas of the quality you find desirable and move down the quality ladder, and again you are not able to find ideas at the valuation you like, then you move further down the quality ladder, many steps down, and find a lot of ideas which are at a valuation you like. You compromise on the quality, believing that the quality perception will change. The quality won't change. Your expectation is the quality perception of the market will change. And then you buy those ideas. You feel very happy that you have deployed your money. After some time, you realize that most of these ideas aren't worth your time and effort. You find on the other side, quality ideas have corrected. Some of the business have derated. So you get the original quality ideas and valuations which you find likable. At that point, you sell all these lower quality ideas and go back. When you sell, there is an impact cost. And you have done a lot of activity for the sake of activity. Should an investor do this? This is the question that you need to ask yourself at this time. I think that going down the quality ladder in a peak bull market is a mug's game. It doesn't end well. It doesn't take you to a better place. It makes you do a lot of things which you need not do. So, be very selective. Never compromise on quality. Stick to what is your quality funnel. Don't go to a lesser funnel. Simply because it is wider and you find more ideas in that funnel. When you are sticking to your own quality funnel, which is specifically your zone of comfort, I think you're fine. If you need to wait longer, get the desired quality, never compromise on quality, because if you compromise on quality, you're going to waste time and maybe even some money. The money can be earned back, but the time is better spent. That's the central point I'm trying to make in this video. Thank you for watching it.